There is a silence that falls before every rupture. A stillness that doesn't comfort, but unnerves. Bitcoin just passed $100,000. And in that moment, as the world blinked, we felt it, not a celebration, but a question. What the hell is really going on? Welcome back to FluxFolio Finance, where we chase shadows in the global market maze and search for the puppeteers behind the price. Today, the charts are euphoric, but the air tastes like smoke. The dollar is sliding, down 9% in just months. Tariffs are rising like tidewater against the hull of the world's supply chains. And in the middle of that perfect geopolitical cyclone, Bitcoin is not just surviving, it's soaring. Is this a revolution? A monetary awakening? Or is it something more scripted, more cynical, a carefully staged dance before the trapdoor opens? To understand why Bitcoin's at $101,200 today, you must first understand what it is. Not just the code, not the ledger, but the myth. It was never just a digital coin. It was always prophecy. Born in 2009, cradled in the ruins of Lehman Brothers, it emerged like a phoenix from fiat ashes. Satoshi didn't just write a white paper. He carved a ciphered gospel into the fabric of finance. A total supply of 21 million coins, no more, no less. A defiance encoded into scarcity. And now, with 19.8 million mined and only a sliver left to uncover, we arrive at this strange, glittering threshold. At $100,000, the world no longer shrugs it off. They watch. They whisper. And most of all, they buy. But the hands buying now are not like the hands that mined in 2010 dorm rooms. These hands wear cufflinks and sign ETF filings. BlackRock holds 347,000 BTC. MicroStrategy, that corporate crusader, holds over 530,000. Fidelity, Vanguard, Grayscale, all in. What began as a punk movement is now institutionalized rebellion. A rebellion curated by Wall Street, monetized by regulation, and sold back to you in neatly packaged ETFs. Look closer, and the market reveals its masks. March saw $422 million in ETF inflows. April? $326 million in outflows. Rinse. Pump. Exit. The question isn't whether Bitcoin is manipulated, it's who is orchestrating the illusion of freedom. Satoshi's 1.1 million untouched coins hover over the ecosystem like a ghost, silent, unread, unclaimed. A fortune that refuses to move, even as trillions ripple through the blockchain. And still, Satoshi remains anonymous, unprovoked by lawsuits, FOIA requests, conspiracy theorists. Perhaps he is no longer alive. Or perhaps he's watching, amused, as the empire built on his idea twists itself into a speculative Ouroboros. And yet, despite the theater, the protocol remains pure. Bitcoin's strength was never in its politics. It's in the math. In a world where the Federal Reserve prints with abandon, where USM2 supply surged 30% since 2020, Bitcoin stands like a monolith of digital integrity. Unyielding. Untouchable. But don't let that purity blind you to what's being built around it. This rally didn't come from nowhere. A series of shocks cracked the sky. U.S.UK trade deal, April 2025. This deal wasn't just about removing tariffs, it was a geopolitical signal flare. The United States and the United Kingdom, amidst a world fracturing into protectionist blocs, executed a zero-tariff bilateral agreement. On paper, it's trade facilitation. In reality, it's monetary choreography. As headlines broke, investor psychology snapped into risk-on mode. The S&P 500 spiked 2%, but the deeper story was crypto's shadow surge. Bitcoin rose 5% in a week not because of trade, but because of trust. This deal signaled that the US was still capable of creating global partnerships, of shaping order in a world leaning toward chaos. And in a risk-driven asset class like Bitcoin, belief in coordination becomes fuel for price. US-China talks, April to May 2025. You don't need a signed treaty to move trillions. You just need rumors of one. The faint suggestion, subtle, deliberate, of easing Trump's brutal 245% tariff regime on China was enough to jolt crypto markets. Bitcoin rallied 3% in just 2 days. Why? Because the mere scent of détente signals liquidity. Markets know that easing trade restrictions opens the sluices of capital, lowers inflationary tension, and reduces the geopolitical drag on growth. In financial markets, peace is not the absence of war, it's the promise of yield. When superpowers shake hands, speculators click buy. China's $300 billion stimulus, May 2025. China doesn't stimulate, China floods. In early May, Beijing injected an eye-watering $300 billion into its financial arteries, open market operations, OMO, reserve requirement ratio cuts, and a surprise 25 basis points benchmark rate drop. The goal? Prevent collapse amid declining exports and rising U.S. tariffs. The side effect? Crypto ignition. Binance Coin, BNB, surged 4% on domestic volume, and Bitcoin followed. Liquidity is blood, and when China pumps, the whole market's pulse quickens. Traders interpreted this as a monetary counteroffensive, an effort to reflate risk assets and stabilize sentiment during a coordinated economic war. Bitcoin was merely the vessel. Trump's strategic Bitcoin reserve, March 2025, a moment that crossed the surreal into the sovereign. The Strategic Bitcoin Reserve Act, signed by President Trump in March 2025, codified Bitcoin into U.S. monetary architecture. This wasn't just a nod to crypto, it was the weaponization of it. Framed as a hedge against fiat devaluation and a backstop for strategic reserves, alongside gold and oil, this move changed the narrative overnight. Bitcoin was no longer just a store of value, it became a geopolitical chess piece. The U.S. openly began acquiring BTC via public-private mechanisms, with the Treasury holding Bitcoin in cold storage as a monetary contingency plan. The result? Legitimacy. And legitimacy in finance is rocket fuel. ETF inflows, BlackRock and Fidelity, Q1 Q2 2025. March saw BlackRock funnel $351 million into its Bitcoin ETF, no coincidence. Institutional demand surged just as geopolitical tensions peaked. But what really lit the match was Fidelity's zero-fee crypto IRA program, offering tax-sheltered exposure to BTC, ETH, and LTC. In a yield-starved, inflation-bitten world, this was like dropping gasoline on an already smoldering bonfire. The result? A tsunami of middle-class capital flowing into Bitcoin. Wall Street's conversion of crypto into retirement-safe, regulated assets has blurred the lines between speculation and allocation. And when retirement funds begin to chase scarcity, parabolic moves follow. Supply shock. 24,534 BTC bought versus 1,350 mined, April 2025. The numbers are biblical. In just 72 hours, over 24,500 BTC were bought up by ETFs, institutions, and sovereign actors, while only 1,350 BTC were mined. This isn't a simple case of supply outpacing demand. This is a liquidity black hole. The structural supply of Bitcoin is throttled by design, post-halving, it's even tighter. When demand shocks meet fixed issuance, price doesn't rise, it explodes. This short squeeze was telegraphed by chain analytics, yet ignored by most retail players until the spike was already in motion. By the time the headlines hit, the whales were already gone. Geopolitical tensions. Russia's Victory Day, May 9, 2025. Russia's annual Victory Day parade took a provocative twist this year, not just tanks and missile launchers, but speeches laced with crypto-nationalist rhetoric. In Moscow, state-aligned officials hailed Bitcoin as a tool of economic resistance against Western sanctions. Some even hinted at a ruble-denominated stablecoin backed by Bitcoin and gold. The symbolism was surgical. Russia reframed Bitcoin from digital libertarian money to sovereign economic insurgency. Investors, sensing a safe haven narrative forming amid geopolitical saber-rattling, rotated into BTC. On the day of the parade, Bitcoin surged again, not because of tech, but because of terror. In a world where swift access can be revoked, borderless money becomes borderless power. These events are not isolated, they are signals in a symphony. Together, they form the soundtrack of Bitcoin's $100,000 crescendo. But symphonies, too, have finales. And the louder the build-up, the more abrupt the silence afterward. So what do? You hold your Bitcoin. Not because it's going to the moon, but because it's a raft in a sea of monetary madness. You lend it, 2.5% to 4% loans backed by your ETH or SOL. And when the market collapses, and the S&P sinks 20%, you buy assets, real ones, discounted by fear. You don't chase the pump. You prepare for the plunge. In Protective Assets, we said Bitcoin is a hedge. In Buffett's Cash Fortress, we showed how cash is a weapon. In the Global Handshake, we warned you, liquidity will return, but not evenly, not honestly. Now you see the endgame forming. This isn't just about money anymore. It's about narrative control. About what you believe in when the lights flicker. Is Bitcoin your exit? Or your cage? The storm is already here. The question is whether you're watching the lightning, or becoming it. Stay sharp. Please like, comment, share and subscribe. Revisit our past tapes. And when the next illusion begins, you'll already know it's just the opening act.